Hi, this is Andy Hoffman, Media Director of Miles Franklin for my weekly audio blog. This week we have a special guest, my good friend Jeff Nielson at BullionBulls.com. Jeff, in my opinion, is one of the best precious metal blog writers out there and a very cool guy as well. Today we're just going to, it's Friday afternoon, the market's just closed, and we're just going to chat about a couple of topics. I usually just monologue myself, but today we're going to dialogue. So we're going to jump right in. And first we're going to talk about the gold and silver attacks of the last 2 days. I know it's not everyone's favorite topic, but it's certainly apropos, especially given so many incredibly precious metal bullish news items out there. Now, for people who didn't notice, and I'm sure most of you did, at exactly 8:40 a.m. the last 2 days, we've seen massive paper gold orders go in to hit all of the bids out. 600,000 ounces yesterday morning at 8:40 a.m. just after the COMEX open, and 800,000 today. 600,000 is about $800 million worth, and 800,000 is well over $1 billion worth. So you can imagine who was involved. And Andrew McGuire actually mentioned Goldman Sachs. What a surprise. So they actually had to shut down the COMEX for the second time in a month because of these things, because what they call a stop logic type movement, where they actually had to look around and see if there was something manipulative, which of course they didn't because the CFT is closed. So, Jeff, what do you think about what's going on in the COMEX? I know it's a loaded question.
Well, after you took a moment to explain what this stop logic terminology meant, to me it was pretty striking because when these futures markets were created in the first place, the pretext for the creation of these paper markets to sell physical commodities was that they would do two things. They would maximize liquidity and they would provide perfect price discovery. Well, of course, I don't have to tell your readers we don't have anything close to perfect price discovery. I mean, that's obvious just from the observed prices. But what we see with events like this is the exact opposite of what we're promised with futures markets. We have a complete drying up of liquidity in a global futures market. This is a clear sign that these markets are broken and that the entire premise of these futures markets is at the very best flawed.
And you know what I find interesting? People have kind of taken it for granted that the last 2 weeks we have not had a COMEX COT or Commitment of Traders report be published, either this today or last Friday. And the reasoning was that there was a government shutdown. Now, call me crazy, but the Chicago Mercantile Exchange, which put these things out, is a public company, and the exchanges are open. So please tell me how the government is not involved in these markets and managing them if they're not even putting out these reports every week.
Well, that's a really interesting point, and I wasn't aware that that particular report had been affected, actually. But this is just begs the question. What's really going on in these markets? How is the government even involved in the production of this report?
That's right. And this, as we know, the SEC is not closed, not that it matters, but the CFTC is. And who decided in the government that the SEC is essential to prevent fraud in the stock market, but in the commodities market, it's not essential to have a regulator. But look, we'll move on from this topic because, as most readers know, we could probably talk about this one alone for a couple hours. Now let's go on to everyone's favorite nauseating topic, the debt ceiling. And we'll follow that up with the government shutdown because remember, everyone, the government is supposedly shut down right now, even though probably 90% of government employees are still working. So, Jeff, tell me what's your view of what will happen with the debt ceiling debate, if you want to call it that, and what the ramifications will be in the coming year.
Well, things are so opaque these days that I try to not, look at my own tea leaves too much, but rather look to the mainstream media for clues. And so, when I saw a recent Bloomberg headline warning that, a U.S. debt default would be, a catastrophe worse than Lehman Brothers, to me, this suddenly at least materializes as a potential game plan for what's taking place right now. We know that the U.S. is fundamentally insolvent, if not absolutely bankrupt at the present time. And obviously, there's got to be some end game where you can divest themselves of all this debt, which cannot be serviced even much longer. So, one way to do that would be to stage an, excuse me, an artificial event like this quote unquote debt ceiling crisis, and then allow it to morph into an involuntary debt default where the politicians can then say, well, gee, it's not that the U.S. couldn't pay its bills. Oh, heaven forbid. We were simply got bogged down in procedural matters, and this was, something that snuck up on us. And it's one way of them navigating through this self-created no-win situation.
Yeah, to me, it's all about confidence. They have had such an incredible grip on the markets. They basically commandeered every market from stocks to bonds to currencies to precious metals, that they can create these crises and then use them as cover for the propaganda. For instance, the fiscal cliff. They created, oh, it's going to be tragic if we have a fiscal cliff, and then at the last second they have a deal and everyone gets all excited. The fact is, the deal, remember the deal was, this goes back to the Budget Control Act of 2011. They have basically done no cuts. I mean, debt was 14.1 trillion then. It's over 17 trillion today and rising rapidly, and there's been next to zero cuts, yet we're celebrating that they made a deal. And of course, they'll make a deal here. They're not crazy. They're not going to just shut down the government and default on debt to spite themselves. But the fact is that they, like the fiscal cliff, are going to continue printing money. My guess is that they will figure out a way to do 2 years worth of spending. So they'll probably put the debt ceiling somewhere close to 19 or 20 trillion dollars and move on. But they don't realize, or maybe they do realize, that eventually the confidence is going to be lost. Because as you say, that Lehman Brothers term is all over the place now. I wrote a piece called Worse than Lehman or something like that earlier this week, showing how so many aspects of the financial system are back to Lehman levels, and it's only a matter of time before the actual confidence ebbs. On that note, we can go to the government shutdown and what your thoughts are on that.
Well, I think that we have to accept the fact that this is a staged event. I think that everyone's fairly clear on that. There's no reason for creating a confrontation of this nature in what is a purely procedural matter. This is not a budget debate. This isn't a debate on how money is supposed to be spent. This is simply a procedural issue on essentially increasing the credit card limit on the U.S. account. And so there's no justification at all for introducing substantive issues of how money is spent into a process of this nature. And so the fact that the politicians have chosen to stage a confrontation here is an indication that this is not any sort of real crisis, but is a totally contrived event.
Yeah, I mean, to me, it's still amazing that they're talking about Obamacare. I mean, Obamacare was a law that was passed. What does that have to do with the rest of government working, whether you're in a national park or the post office? Of course, the post office still is working because it's considered essential for some reason. But when it comes down to it, I agree completely. It's just more noise to create cover for all the other things that are going on. And, when will it end? Probably sometime around October 17th is my guess, because that's when theoretically we will run out of absolute ability to borrow money. Would you agree on that?
Well, I that's assuming that they don't want a debt default. I mean, I won't rule that out. The thing is when you look at what's been happening with our economies in broader terms over the past 5 years, we've had this 0% cattle prod continually trying to inject some life into our economies for 5 years now, and it's gotten absolutely no response. So, I mean, these are dead economies. If you can't generate some sort of economic life with 0% interest rates, you're beyond the point of trying to resurrect things, and it's simply a matter of scrapping things and starting over again. So, we're very near the end. So this could very easily be the time they decide to detonate things.
Well, it is possible. We've, especially people in our shadow world, as I call it, are constantly looking for that one event. Be it planned or not, be it a black swan or not, or a false flag or whatever you want to call it. And it is possible that things end that way. I am of the opinion that it would be I find it difficult to believe the government would do it to themselves. Like when people were saying, well, Bart Chilton and the CFTC are going to do something, etc. I mean, they've spent all this time creating this situation. Why would they be the one to end it? I personally think the markets will overwhelm them because, I mean, do you think John Boehner or Harry Reid want to be, or Obama for that matter, want to be known as the people who were around when everything fell apart? I mean, this is just a discussion here. There's two sides of it. What's your thought?
Well, playing devil's advocate and taking the other side, if in fact we are this close to the end, what's worse for these politicians to be the crew on the Titanic when the U.S. was simply overwhelmed by economic events in fundamental terms, or would they rather be the crew that blamed the sinking of the Titanic on some internal squabbling rather than the fact they've been lying to us all along about the strength of the U.S. economy?
Right. Yes, one could say, are they going to just be reactive or are they going to be proactive? Some might say that these people are not smart enough to be proactive, but others would say that they are extremely smart. That's how they became the leaders of the nation. So yes, it's a great. I mean, obviously, on this note, we will certainly know the answer within a few weeks, but it's certainly something to continue thinking about because at some point this whole Ponzi scheme has to end. And will it end by the government creating a martial law situation, or simply will they be overwhelmed? Because if they're overwhelmed, they're certainly going to lose all their power. And if they're proactive, they may be able to keep it. Who knows? So, next topic. Janet Yellen is now going to be most likely the Fed chairman when Bernanke's term ends. I think it's the end of January. For people who don't know Janet Yellen, she is the scariest, in my view, possible choice, given that she is a career, a lifer in the government. And she's been the vice chairman of the Fed for 3 years under Bernanke and has made some incredibly dovish views. Personally, I would consider it more dovish than Bernanke, if you could believe that. Jeff, what is your view on the Janet Yellen nomination, the timing of the nomination, and what it means?
Well, I won't claim to be especially familiar with her resume, probably not as familiar as yourself. So from my more distant perspective, she looks to me, more or less like a clone of Bernanke. Somebody who's simply going to be counted upon to behave in a very similar manner.
I agree completely. And so, I mean, first of all, I was laughing, or I don't know if the word's laughing, but when Larry Summers was being considered and people were saying, oh, he's a big hawk. This is going to be really, they're going to stop QE with him there. And I'm going, who could possibly, other than a propaganda machine like the Nazis, possibly paint this guy to be anything more than a massive dove? Remember, he was Obama's council advisor chief during the whole bailout scene. He was a Treasury Secretary back when they created the strong dollar policy. I mean, there's nothing this guy has done that has been hawkish. But remember, again, I think they were creating a straw man. They just had him drop, and then so they could bring in Mrs. Dove in there. And if people are not aware of specifics of her resume, last year, now remember, the Federal Reserve, when they came into being, they were supposed to control inflation. About, I don't know, 10 or 20 years ago, they decided by themselves that they were going to have a dual mandate of controlling inflation and reducing unemployment. It's very paradoxical, of course, because if you're going to reduce unemployment, it means printing money, which doesn't help with the inflation. But that's another matter. Anyway, earlier this year, she said, I don't care so much about inflation because unemployment is so high. So I'd rather focus on that. Now, if that is not the most dovish thing I've ever heard out of a Fed governor, I don't know what it is. And what a coincidence, she'll be running the Fed. So what do you think the Fed is going to be doing regarding tapering in the year 2014, let alone in the fourth quarter of this year?
Well, what makes this whole dialogue such a logical disconnect is this whole fantasy put out by these bankers again and again that printing money boosts employment. Maybe if some of this newly created cash ever made it into the hands of the average person, then yes, it would stimulate the economy and actually create a few jobs. But of course, it never makes it into the hands of the average person. It all goes straight into the vaults of the Wall Street banks and then gets funneled into their derivatives market or simply soaking up interest in the form of Fed bonds or treasury bonds rather, and so none of the money is actually reaching the economy. So it can't possibly be considered employment stimulative. It's simply a handout to the banks to pump up their paper markets, and so it's insanity to make a statement as you noted, because of course the Fed doesn't do anything to stimulate employment despite what it claims.
Right, and that's where the propaganda comes in. I saw a piece today on Zero Hedge showing the record disconnect, record disconnect between banks' loans and banks' deposits at the Fed, meaning they are getting more and more money from the Federal Reserve, but putting it right back into the Fed to get their free percent or two. So, and JP Morgan has an all-time high amount of, quote, dry powder to mess with markets because they're not lending money anymore. And in fact, if you saw today's earnings from JP Morgan and Wells Fargo, I mean, from an operating basis, they literally couldn't be more abysmal. JP Morgan, including their $1 billion or their, I think it was $10 billion of legal settlement charges, lost money, and Wells Fargo's net interest margin was its lowest probably since Lehman Brothers. So the business itself is not good, and that's why, to me, they need more and more of the free ZERP and QE money just to survive and, of course, pay themselves bonuses. Does that sound?
Well,
yeah. Go on.
So it's crazy because I equate it to somebody with driving a car and at the same time jamming both the gas pedal and the brake pedal all the way to the floor. We've got this ultra loose, ultra insane monetary policy, and yet absolutely restrictive fiscal policy that's doing nothing at all to resurrect these economies. And so it's almost like you've got the two forces in the economy totally working against each other. And of course, there's no possibility of any sort of, decent dynamics in this sort of a scenario.
Yeah, I saw a great piece the other day about peak jobs. It was just showing a chart of the actual full-time jobs. And I mean, I think that we would have peak jobs around now anyway, because, all the manufacturing jobs have gone overseas because they're cheaper. But the diminishing returns of all this money printing has gotten to the point where you're really starting to see an acceleration downward of real jobs. I'm not talking about McDonald's hires twice the employees, but at half the hours so that they don't have to do Obamacare. I'm talking about real jobs. And the more money that gets printed, the less that people can afford. The standard of living goes down, the less that they can afford to buy things. And I think it's a vicious loop that just gets worse and worse over time. And then, of course, when you throw in things like Obamacare, which is going to just, the government kind of just takes over the system and alters what the proper business patterns are, I can't see how the economy has a chance of getting better. So, my view is they're going to keep, as you say, keeping their foot on the pedal as hard as they can, but it's not going to do anything.
No, not as long as there's nothing being done on the fiscal side to actually, get these economies moving. And, certainly corporate mergers and shipping jobs to China isn't going to do anything about making the GDP grow.
And you know what I saw today? I mean, they're running up the stock market. I say that's the government. That's not investors running up the stock market. They're trying to get you excited about this deal or no deal type thing. But I'm reading what they're actually saying in the discussions, and I see right here, Hatch says Obama talked of need for new revenues as part of long-term deficit reduction. I'm going, so it looks like, remember last year we raised the payroll taxes. This could very well be a new deal, which includes more tax increases. And as I've said forever, if we're going to be the socialist states of America, which we clearly are going to, we're going to have socialist tax rates, which is to say, like in Canada or Europe, a 50% federal tax rate. And it's amazing why people just can't figure this out. How are we going to pay for all these things, Jeff?
Well, I have a quite different perspective on the tax system, and I think it would be a bit more than we have time for me to sort of get into the differences there. But I look at it quite differently. I see this problem right now across the West as being simply a great revenue crisis. If you, in fact, look at spending and revenues in real dollars over time, what you see is that spending is relatively a straight line.
Right.
Revenues have fallen off a cliff. So, of course, you can't call a flat line a crisis. I mean, it mathematically defies that description. A cliff, on the other hand, is an obvious crisis. So if revenues fall off a cliff and spending is flat, it's quite clear where the change has to be made. And of course, the problem is that those at the top of the totem pole in the US are actually, in fact, being taxed at the lowest marginal rates in history. And so, this is an insane paradigm where the people who actually are holding all the wealth have never been taxed at such a low level.
Right. Well, I mean, something's got to give. The fact is, of course, spending should be the thing that goes, but that doesn't mean that's what's going to happen. Remember, if you want to get elected, you promise to tax the rich and give it to the poor. Of course, all it does is make the economy worse, but it makes for good print during the election time.
I got to interject here. I think it's so important whenever people use the word spending that we really understand that there are, in fact, good types of good spending and bad spending. And the bad spending, it's really obvious. It's spending on interest payments because that benefits nobody at all except the banksters. It's spending on big military, and it's spending on big corporate subsidies. And of course, the corporate subsidies are orders of magnitude larger than any time in history. So, this is the spending we can't afford. When I talk about spending being flat, of course, the spending on people has actually been declining. But the spending on the military has been going steadily up. The spending on corporate subsidies has been going steadily up. And the spending on interest payments has been going steadily up, choking out the tax dollars available to spend on people.
Except, as you say, Jeff, those three areas, the military, big corporate, and bankers are the three largest lobbyists of the government, and the largest, and of course, healthcare. There's your four. So those bad spending areas are certainly never going to be stopped. And as I mentioned, as I've been kind of writing all along, big government is a Ponzi scheme itself. It's become so big that it can't fail. It can't shut down, which is why nothing is really shut down now. It can't slow down. They will have to keep spending money on all these horrible things. And I just can't see how spending ever gets cut. As you said, look at the debt exploding, but spending never goes down. So do you believe that there's any spending they could agree on to cut other than a couple of token cuts here and there?
Well, that kind of brings us back to the beginning of the dialogue again, and me suggesting that maybe this whole debt ceiling farce is the pretext to have an involuntary debt default, so that they can begin to unravel these Ponzi schemes and yet avoid responsibility.
Well, it's certainly possible. I mean, and by doing so, of course, you're suggesting that the government will become more draconian and authoritarian, which is a given. And which is why we and our friends, Miles Franklin, Bullion Bulls, and the other good, smart people tell people to prepare and protect yourself from just such a situation.
Well, yeah, precious metals are the oldest form of financial protection. And, neither of us have a crystal ball. We can't say precisely what's going to happen tomorrow, let alone a year from now. But you have to go with what's tried and true. And then, of course, combining that, we have the fact that given this insane price manipulation we've talked about, we have every reason for believing that gold and silver are literally the most undervalued assets on the planet. So you combine those two facets together, and then, we obviously have reasons for having confidence in recommending this to investors.
Right, absolutely. And, we and others in our world have done, I think, a great job in putting these reasons out there, and we will continue to do so each day. It's just a matter of it spreading. It'll only take a couple of % of the population to overwhelm this scheme, because at these prices, supply is going to continue falling and demand is going to continue rising worldwide. So I was going to talk at the end about what catalysts you might see for metals in the coming weeks and months, but I think we've covered here that no one really knows when and what will happen. It could very well be something that happens now. It could be something that happens next year, but it's not going to be many years away. Would you agree with that?
No, that's the one thing that I've sensed for probably about 15 months now, is that in fact we are clearly building toward quote unquote something big. And so in that respect, a debt default scenario would probably be more benign than a contrived war. So perhaps this would be a lesser of evils.
Okay, well, we'll see, certainly. And Jeff, just to finish here, give us a couple of words about your website and what you're doing over there.
Sure, our site is BullionBullsCanada.com. That's where I publish all of my commentaries. We also have a very active forum where we discuss, not only precious metals, but pretty much anything that interests people over there. And I also have my daily dialogue on the forum, which I call the Daily Grind.
Well, I can't recommend Jeff's work enough, and hopefully you'll also go to milesfranklin.com and read our daily blog. Until next time, we'll talk to you soon, Jeff.
A pleasure to be here.
Great.